guys, and glad to have you on board again today, even though this is Friday and therefore we're heading into the weekend, which means another TradingView weekly update. Today we're going to do an intraday update to prepare for this, because probably this weekend I'll argue about the general psychological mismanagements people do into a pullback context, which is exactly what I've experienced all day long for the latest 2 to 3 days. People simply forgetting about the message that have been sent just a few days ago, lacking of structure just because of the impossibility for their mind to adapt. Remember that a trader is not someone who forecasts the future, but someone who adapts correctly to the market. Of course, no one can be 100% perfect, but still, normally statistical returns over time should be far from profitable. Should be far more profitable if you do it right and consistently. Anyway, so here is the deal about the pullback. I've always been clear about that. Normally, the pullback shifts the sentiment into terminating a breakout phase, which is just a global consensus on the valuation going one direction and not the other. Everyone was bullish on the stock market, on the crypto market. And that was absolutely rational, though. We had a positive news flow. Basically, not a single negative news was hitting the market back then. That's no longer the case. We're starting to see some mixed feelings and mixed news flow impacting the market, which of course comes along neutralizations of price action. Well, sure thing. The problem is that human behaviors, natural behaviors, tends to what we call homeostasis, which means when you're in one state, you just want to keep it that way. We were trending and you got used to it. Most importantly, it was pleasant for everyone. So everyone just wants to keep it going, which is irrational. That's a cognitive dissonance. We have clear evidence of a market changing pace, but people just want to keep it going. We're going to talk about that this weekend into the TradingView update. So today we're going to prepare it by technicals. So the thing is that the pullback generally breaks a support. That's just the physical reaction of the sentiment shifting. So just look at that. I've used the crypto total as a kind of a global reference for this. Well, have you seen us breaking a support? Now, well, we did not. We pulled back and we bought out of a previous support area. So there's no support breakdowns. In the perspective that we broke and maintained candle closes below, okay, below the context, suggests the possibility for a bearish range to show up are there. And where are we? Back into the resistant context over 61% Fibonacci. The algorithm detected the context as possibly reacting. And yet, we had no signals, but look at that momentum. This is a crazy motherfucking bullish momentum. I mean, the last time we've experienced such a thing was in the late stages of the bull run when we accelerated through the resistant context, which we do not in here, to be honest. We do not accelerate through the trend channel, which means, well, this is not really that bullish to me. It actually suggests that if we're truly in a pullback, we're going to have to get there. And we're going to have to break it down, because that means this is the reaction, typical reaction of a market that sets for divergence. We break a support so that we clearly send the message that the party is over. And of course, everyone will be extremely bearish out there. Everyone will say, oh man, this is no bullish anymore. We should have... Well, this is exactly where the buy the dip situation will be. Buy the dip in a pullback can either be on a single straight line, which means generally we fuck up the support immediately, on a single straight line, which means we've done the job. This is a buy the dip situation. And in that perspective, we retrace down to a neutral third range boundary, and then we just destroy volatility. Generally, cryptos like these triangle structures or any other more complex things. Remember that in a range, you can have multi-time frame structures, which means don't use your Elliott wave forecasts or whatever. In a range, that is pointless. Just make it simple. As long as we do not mature the range with the third range boundary, there's nothing you need to focus about. Okay? So right now, as we didn't really break a support so far, I still believe that a support breakout is down the road. The question is, how do we risk manage that probability? Because that, of course, doesn't mean it's going to happen. Nothing is ever guaranteed in the market. So there is a significant risk of breaking to lower low points into the global crypto market. So how do we handle this? because of course we've got multiple assets composing this crypto total, and we're going to have to zoom in, okay? So the first things we're going to have to do is to look at Bitcoin, because that's the massive impactor into this crypto total. So where's Bitcoin? Well, as you can see, Bitcoin made something that could be a buy the dip situation. 27% drawdown, totally confirming. We've retraced down to average valuation in a bull market, and we have broken below a support. We are trading nearby the 23% retracement area, which is totally confirming the fact that we could have made a pullback. Moreover, on the higher time frame, we've dipped below the 50% context, which is a required necessity for the market to build a significant enough retracement for a pullback. Okay, just have a look at total. Did we? No, we did not. Here is where the 50% context is. One more reason to be really cautious. These things update on a weekly, on a monthly basis, and we're surely going to terminate a month. But that doesn't mean it is going to surge out there. I think right now there is a limited proportions for these markets not to make a lower low points, and I'm talking about the general crypto total. So let's sum up the core informations we have. There is still a significant, no, not significant, but a possibility for a second downside leg that would break below the previous one, but not with Bitcoin. That means something in this equation doesn't feel right. And it's exactly what I'd like to share with you guys today. I think most people right now are making the stupidest mistake ever, the classical mistake in a pullback, which is they want momentum. So they go wherever the momentum feels like it is still actively pushing prices. And where is that? In altcoins. And they are severely buying into the same old shit. Binance, Ethereum, Ripple, whatever, anything that has momentum. Everyone just forgot about the message sent just a few weeks ago. The market is not bullish anymore. It's going to neutralize for a bit before reactivating. That's the state we're into. That doesn't mean it can't change, because no one knows the future. That just means this is by far the likeliest outcome right now. And people just forgot about it, just exactly as I thought they would. The market retraces right up to third range boundary areas, and what do we see? Everyone's back in the bullish state, where they should actively think about what's been sent a few weeks ago, and they should start locking on profits. I've warned you about the thing that you could anticipate the reverse a few weeks ago by taking some tiny partial profit takings, so you would have a much better mindset and eventually be able to try buying the dip, which I hope you did. But if you did buy the dip, then now is an appropriate time to start locking on the gains. Not on Bitcoin, because Bitcoin certainly doesn't yet offer a third range boundary. So Bitcoin still has to go up to offer this third range boundary. So currently Bitcoin has quite some upside potential. So Bitcoin upside potential, crypto total not an upside potential, because we're already dealing with third range boundary areas. There's a problem with altcoins though. This is where the problem stands. This is where everyone's getting excessively bullish right now, where I think they should be really much more cautious, meaning that we have to study dominance. So let's have a look at the dominant structure. Well, congratulations, folks. No liquidity, no volatility out there. We've totally flucked up the 55 area, which was the center of gravity for dominance, okay? So we've surely fucked up this area. Do you see any pullback to retest this area? No, we did not. We just kept pushing like it was nothing. And I can be damn telling you that this is not the case. This is not nothing. We've broke through this area. We're going to pull back out there. So it's just not an if, it's a when. When are we going to pull back to 55 on dominance? We're trading 49 right now. So like I said, we have limited but still existing upside potential on Bitcoin to get to its third range boundary area. Sure thing, we could retrace right down to 41K, or we could just try to go 51, where is the current buy area in the current range with minimum retracements, okay? So sure thing, Bitcoin could retrace right back down to 51K, where it's likely going to be a buy, okay? It could keep pushing up to get to its third range boundary, but if it does, that means altcoins will not likely follow, because altcoins have now limited upside potential. because of the crypto total dealing with the third range boundary area. So there is clearly a problem, and the equation I have in front of me just tells me and leads me to study this chart and to figure out what is the current risk of potential reversal into the dominance. And well, I need to put prices in here because there's not enough volatility, and what I can see is that something happened in here. We've built something, we've retraced, and we've worked around breaking the trend channel. Of course, it didn't really last very long, which means I'm caring about candle closes. Okay, here was the latest bottom. Where are we? Oh, damn it, we're dealing with one-to-one ratios. After ranging, of course, quite rapidly, but still, something happened in here. Everyone just forget about it. I don't think that we should. This is where we started dropping the other day. Where we are right now should be quite worrisome for those who are dealing with keep on pushing the dominance down. I think in here we're into a reversal potential area. Reversal means this is for experienced traders only, and there sure shit is no signal right now. So it's not an appropriate time to actively, excessively bet against the Bitcoin dominance going down, but it's not the appropriate time to start thinking about keep pushing down. Though keep overstating Ethereum's, Binance, Ripple, Stellars, all of the big guys who wait into the dominance, everyone is bullish on them again, just like nothing ever happened. Sure thing Bitcoin made a pullback, and that was a buy the dip. So as Bitcoin bought the dip, then sure thing altcoins are going to keep pushing. That's a narrative. That's a narrative I'm currently disagreeing with because I see technical structural problem for the scenario to keep pushing down. We're in an area in which I sure shit don't know if the market is going to reverse. I just can tell for sure that these prices will be retested at some point. They will have to. The question is when. And now is a timing in which this probability comes to be significant. So that doesn't mean you need to bet on the Bitcoin dominance to go up and therefore all of the altcoins to suffer significant losses, but it's an appropriate time to start thinking about the probabilities, though risk managing, going into shaded gray areas. Though you carefully want to look at this, there sure is not enough volatility right now to make a forecast, but you need to bear in mind the probability of a violent, volatile reversal, because that's exactly the way we've done it. And we've done it the last time. So expect it to be volatile, though you might be surprised. And this is the reason why today's message is you might really want to think about partial profit taking altcoins. Today, I've done something I don't like, but I took some 5% profit on Ethereum, something I clearly wanted to just never do until we get to 30K, to 3K, but I started doing it. Started selling just a bit of my first Ethereums, okay? Last time my profit took was $900 or $1,100, and I really was stupid to have done that, but still, that's another day. So the thing is that now I'm starting to lock on the gains on Ethereum because of this scenario. Of course, very limited profit takings. That's the message I'm sending. Don't switch to over extreme sentiment. Basically, it is not an appropriate time to be like, man, the altcoins will crash, so I need to profit take and get the fuck out. Well, that's not the message. What I say in here is that this might be volatile, which means either you're going to be in front of your computer at each and every second ready to act, or you put some stop losses below some supports. For example, you can put a stop loss in here, though if prices drop, you take some profits. That's one option. Option number 3, you think smart, and you understand that this is not necessarily requiring you to try catching the market up. But just to understand that we're dealing on top of resistant context in here, for example, BNB is attempting for a breakout in a range. Well, doesn't that sound stupid? To try breaking up in a range when you have signals like that, that tells you that the range is mature and that this could be a range breakout. So you all guys want to trend follow like, man, BNB has to go $680. Well, sure thing, you're still trading with the previous third range boundary area, which means if you fake in here the breakout, this is right back down the bottom area of the range where I think buying entries might be really worth it. So there is clearly a downside potential on major altcoins. Everyone just clearly doesn't give a fuck about it, which I think is clearly a problem. And we're going to talk about this in the weekly update and all of the psychological mindset people are into, which I think are counterintuitive. Technicals suggest the risks are increasing, whether that is the crypto total and the Bitcoin state, looking at the dominance reversal potential and the fact that major altcoins give us some technical areas to risk limit, which everyone just flush away like there's nothing to fucking care about. I disagree, and that's today's message. I think you guys have to lock on some partial gains. I shared my personal management, which is just the stupidest ever shortest profit taking I've ever made, which is like 5% profit taking on Ethereum, because that's the last thing I haven't profit took on. I profit took on all of the other guys already, so that's the only thing I had left to do. What I'm intending to tell you in here is that, of course, depending on your personal risk assessment, you can vary between like 5 to 25% at best, but certainly don't go anywhere beyond that. The only reason why you could take more than 25% profit is if you bought the bottom of ranges. Like if you bought Binance in here, meaning you have no previous entries on this, where sure thing, you really want to look at least 25% out there. That's a bare minimum. In these cases, that would be from 25 to 50% profit, because there is very limited upside potential. This is what the technical signals tells you. So the thing is in here, if you just put the stop at break even, well, you took some risks back then because you didn't know the market would reverse. You had limited risk taking, sure thing, that was a good bet. But here you are, and you have contradictory signals, which means if you decide not to act, it's because you're ignoring risks. And that is not how I teach you trading. You might not want to do it because you fear of missing out. Well, partial profit taking doesn't mean getting the fuck out. You're still in. But ignoring risk is what people do when they have a bullish bias. When you are misaligned with the current market state, in which they clearly tells you something is changing from trend to range, but you still want the trend to go. And that is a dangerous trending cognitive dissonance that we are going to heavily talk about into this week update. That is supposed to be the next trading lesson, actually. I was normally supposed to record it, which I did not yet, but sure thing this is going to be coming along in the future. And tomorrow, or eventually on Sunday, I'll record the weekly update on TradingView, in which I'm going to introduce some of the narratives about these perma-bullish biases, in which a lot of crypto traders are into right now. I hope you won't. So don't forget about profit taking, not entirely, because that would be absolutely staggeringly stupid, but partial profit taking is absolutely required. We've talked about reaching out the third range boundary areas in cryptos to lock on some gains. Here we are, and yet everyone just doesn't want to. That exactly is the sign of a cognitive dissonance. Bye, guys.